Greg, we've done this a couple weeks in the last month or so. I think it's kind of fun. We're calling this buy one, hold one, dump one, right?
You betcha.
You're up, my friend.
All right. Just three kind of dividend paying stocks that I look at. We'll just do a little bit of analysis, and then you guys can tell me, it's the old marry one, screw one and kill one kind of thing. So it's similar in that vein. Let's look at Amat first. So Amat's technically speaking, flag pattern here, pulling back to support. You start looking at this from a technical, it looks like it's setting up real nicely for an opportunity as far as I'm concerned. From a fundamental standpoint, if you can go to Market Beat there, Tyler, for me, you pull up the web page. Yeah, Market Beat. And if you can throw an Amat into their search bar there.
Bring it over here in a sec.
And you will see some dividend information there.
All right, I did the search bar and I get articles and more down here.
Okay, let me see. Kind of looking at my screen as well. So yeah, so to the left there where it says related companies, click on Amat there. Yeah, click on that. And go to dividends, which is about the fourth one over from the bottom there, right there. So looking at some dividend information here, 86 cents or 88 cents annual dividend. So not a huge yield here.
Back off, ad.
Return to page in the bottom. It's one of the most annoying things about FinViz. I finally capitulated with FinViz just to get rid of the ads. Yeah, there you are.
So not the most highest yield ever. Bit of an expensive stock, but pretty solid company overall. You look at the 3-year growth. The payout ratio is what I like. You look at the trailing 12 months, the payout ratio is only 21%. So that means that they do have the ability to bump it up if they want. And their dividend payment is kind of all over the place. It's not as it doesn't flow quite as well as some of the other things that I've looked at. But again, you've got an opportunity from a technical standpoint here. You do have a dividend payout, like I said, not huge, but their payout ratio being so small, you would think that it's not really a big deal to continue paying out their dividend through their earnings there. Okay, so
you like Amat, okay?
Okay, that's the first one. Let's go to BEP. All right, BEP here. Looks like we're high basing. Now this is a stock. It's only $43. Renewable Partners. It's a partnership. I think it's what they call them, MLP. I believe they call it. Just kind of high basing here. So you've got a technical opportunity here. If we go to that one there, let's go to dividendinvestor.com. I kind of like the information a little bit better there if you can, Ty.
And while you guys are getting that up, BEP, I don't trade this one much, but they do solar, wind, alternative energy stuff, Greg, I believe, that type of business model. This is what I'm reading.
Correct. Yeah.
Yeah. Okay.
Yeah. I'm reading the title, The Renewables.
Yep.
All right. So let's fire that BEP in the top ticker up a little bit there, Ty, right there. Yep. Yeah. Right there. All right, so we're looking at a 2.84% dividend rate yield. They don't give a dividend payout ratio here. That's why I went to Market Beat with the other one. There's been some challenges with this website recently about getting a payout ratio. But let's scroll down a little bit there, Ty, and let's look at the payout. And if you go down, keep going down. There's lots of information here, but if you keep going down, there you go. So there's your bar graph of the dividend payout. So dividend payout's been paying for a while, kind of all over the board. This is what this type of unit does, is they kind of pay according to how they do. So it's a bit up and down, but as you can see, they've been paying for a while. If you can just scroll back up for me there, Ty, it gives you a time. Go up to the top for me. Yeah, so it says 0 years of dividend increases, consecutive dividend increases here. Been paying dividends since 2011. So not a huge history, but definitely a dividend payer, just under that 3% there. So the next one, the last one is BP. So BP here got earnings coming up, right at a level now where we're looking to break out. Obviously, an oil play. Oil's starting to broke out yesterday, starting to move up. BP is one of these companies that it's stayed true to its nature. Really, really kind of a similar price point as it was last year at this time. So if we can go to dividendinvestor.com and take a look at that, Ty. So you got a big old dividend return yield of about 6.11%. This is where this dividend payout ratio, this is where this website falls down. It says 1,254% of their for dividend payout ratio, which essentially means that they're using 1,254% of their earnings to pay for the dividend. That's actually incorrect. I looked at it on Market Beat, and it's 42% is their dividend payout ratio.
Yeah, so 42% is the ratio. Okay.
Correct. 0 years consecutive in increases, paid dividends since 1990. So you've got three different stocks here, all doing different things. Some good, dividend payers. If you scroll down to that bar graph for me there, Ty, you can see here they're kind of all over the place. Had some challenges, 2010 there, pulled back. Now, one of the things one of the things I want you to note, though, too, they did cut their dividend there. Sometimes what you'll see in this, and it's not this particular example, but sometimes if you see a really wide bar ahead of a very small bar, sometimes what happens is one of those dividend payments get kicked to the new year. So that can offset some of that. But
that's when they had that oil spill too, right?
Yeah. So in this one, they actually cut their dividend there. They've kept it the same on a number of years there. They trimmed it back last year as well. That's where that 1,254% came from. Is obviously the oil stocks were getting beat up pretty bad, and so they did trim it back, and that's how they've got their ratio down to 42%. So buy one, hold one, dump one, go.
Okay, I have thoughts on this. Tyler, you want to go first?
Yeah, you kick it off.
All right. Let's start with Amat. I love the stock. I love the stock forever. I mean, Matt has been talking about Applied Materials for the better part of 7 years, I believe, and it's been on our Tackle 25. Give me a long-term chart on this thing. The only thing I'd say is, and it's not going to affect my decision, Greg, but when I think of Amat, I do not think dividend company. Just start with that. It's actually kind of a nice thing that there's a small dividend that they do pay around that 1%. And they're obviously going to be able to consistently do that because this company makes money. They are just a wonderfully run, fundamentally strong, fundamentally sound company. I have no problem having the dividend, but this one to me is the absolute buy if you don't have it. It's a hold if you already own it. But this one is right there at the top of the list. And Matt, I see you're coming on in here as well.
Yeah,
anything you want to talk about?
Applied Materials.
Yeah, we did say Applied Materials. If you say Amat three times.
Well, Matt is in Amat.
That's right.
So all I heard was, "Hey, Matt." That's what I heard. Now, that was a good go on, Dad joke 101 there, buddy.
That was good.
There you go. No, I heard Tim say the dividend. Right now, you don't think dividend for Applied Materials because it's in a ridiculous vertical growth stage that is post-pandemic related. Typically, Applied Materials, though, is treated fundamentally driven and not technically driven for the most part.
Mm-hmm.
And so dividend, and one of the reasons why Applied Materials has been a mainstay for as long as it has, is because of the fundamental nature of Applied Materials. This growth stage of Applied Materials is just sexy, and hopefully it never ends. But that dividend is like that cherry on top, though.
It's nice to have it. You're not gonna not cash it. I'll tell you that when the market puts it in your money or in your account, you're going to take the money and reinvest it. No doubt about it.
No, if they want to give you $1.39, take the $1.39.
Of course, of course. So Amat to me, Greg, is a slam dunk. And I'll just call this one a hold since it should be on people's radar. If you're a Tackle Trading member, Team Tackle here, a Tackle 25 member over the last 7 years, you probably got Amat right on your radar in your watches. So I'm going to say hold for Amat. And on that daily chart, Tyler, it's got a nice setup too. I mean, it was on the option report last weekend. The flag is, and the retracement there is developing nicely. Give me next, we'll go in order then, BEP. So it's going to come down to the two here. And when I look at an alternative energy company, Somebody just really quickly looking at the pattern is trading somewhat similar to some of the solar stocks. Look at First Solar recently here, Ty. They're not all going to be correlated, but had the pressure down. Look at some of the other CSIQ, maybe. Okay, so they're under more pressure. So BEP is even holding up better than that and threatening even a potential breakout. I like the line you've drawn there. I'm going to call this one a buy on that breakout confirmation above $44. I like that pattern. I like the potential. I would have no problem if somebody said buy AMAT and hold BEP, but I'm firmly going to be on this one. I'll see what Tyler agrees with me or not. BP, I'm a sell. If I'm playing energy for the dividend, there's other companies I like a little bit more, particularly in the way that I approach the way I'm with my energy stocks like ExxonMobil or a Chevron or some of the smaller names. I love writing covered calls against them, right? And I love those option chains a little bit more than I like the BP option chains. And just relative performance here, I'm looking at BP, Greg, and let me get the number. Just flash against a couple of different ones here, Tyler. BP has had a performance year to date of 24%. Look at ExxonMobil, 39%, much better trend, right? And ExxonMobil does pay a nice healthy dividend as well. So for me, BP is not good enough to compete against the other energy stocks I like even for dividend cover calls. I'm dumping BP, I'm buying BEP, and I'm holding AMAT. It's been on my radar for the better part of a decade. Tyler, what about you?
Oh man, I was listening intently there. I'm like, okay, surely Tim's going to say something I disagree with. And you did not. You did not. I see zero flaws in that logic, and I think I would agree. I would sell BP. I think, like you said, if you want dividends, you got better choices. Everything has a higher dividend yield in the energy space, so that alone is not a good enough, I think, carrot to get me to go chase after BP. And then AMAT, a hold, yes. We featured that in Trade Masters last night. I do like that breakout of BEP too. So your logic, my friend, is unassailable, and I concur with your picks.
Thank you, my friend. I appreciate that. But here's the part in this segment we've seen the last month or so where Greg rips on our analysis and says you're wrong. Greg, are you on the same page with your three here? What are your thoughts?
Yeah, so I like the technical setup in AMAT, but yeah, the dividend's fine to take it. It's the technically speaking, I'd love to buy it, but I'm not holding it as a I'm not holding it as a one of the typical dividend payers that I do, because A, the dividend's not high enough for me. B, it's a more expensive stock as well. So for me, I look at something like Brookfield Partners here. They've got a decent dividend rate. They've got a decent setup here, a little breakout. They've got a decent price point, right? $43. You can, if I'm looking at this versus AMAT, I can get almost 2-to-1, 3-to-1 number of shares, right? So if I'm looking for that dividend, that's where I'm going to go. Now, typically I like to see kind of more steady dividend, but because I understand how these partnerships kind of work, it's matched to performance. So something like Pembina used to run that way as well. A long history of paying dividends, like not missing dividend payments. However, they're not like clockwork where you can expect a certain amount each time. You're going to get those years where it's higher. You're going to get those years where it's lower. But overall, it's pretty solid. So this one here, for me, would be the buy. AMAT would probably be the hold. And again, BP, just because they've cut their dividend, you will see that ExxonMobil and other ones. Now, I like the price point, obviously, of BP. It's a cheaper stock, but it's not giving me what I need from a dividend perspective. When I kind of look at these things, I look at the technical read because that's my timing, but I look at, am I going to hold this thing for a long time? And in the case of BP, I agree with you guys there, which I hate to do, but I agree with you guys. I think there are better choices in the energy space. So dumping BP, holding AMAT, and buying Brookfield. So that's how I see it.
I feel like we're dancing here today, Tyler. Looks like we win, I guess, or we pass. I don't know if there's any winners. We're all winners here, Greg. Greg, thank you, man. That's fun bringing those three stocks for our little segment here. Buy one, hold one, dump one. Matt, what did you think of those three? Anything you want to throw in there?
No, the only thing I wanted to add was I thoroughly enjoyed this segment and thoroughly enjoyed the conversation. Thought the analysis was spot on. Well done. I was just sitting back as a consumer, just truly enjoying the conversation.